Mr. Tyagi, good morning. Thank you for joining us. I hope
Good
all's well
morning.
with you, your family, and your employees and colleagues.
Yes, thank you, Nikunj. Good morning. No, all's well with our family, colleagues, at the office, at home. Touchwood, I think, while obviously we continue to be in an environment of high caseload, but I think overall God's been kind so far.
Wonderful. I'll start with the big picture first, Mr. Tyagi.
Okay.
What are the trends you see for DLF and in the Indian real estate sector? The problem needs no introduction, and it is logical to imagine that on the demand side there would be a crunch which would be felt across the board, and your numbers are showing the same. So, what is your sense? Should we look at your numbers which you reported for the quarter gone by with a magnifying glass as the reality for next 2 quarters, or we can just completely brush your numbers aside and move forward, because what you will report going forward will be very different from what you've reported for the quarter gone by?
So I'd agree with that. As we have mentioned even in our own analyst presentation, we expect, given everything that's happening, Q1 to be, frankly, a washout is the phrase that we used in our release also. Because I think Q1 will be extremely stressed, because Q1 is the piece where I think the max impact of this entire pandemic, I think, would be felt. We expect Q2 to maybe, now that the economy is emerging from the lockdown, so Q2 should hopefully begin slightly the upward incline, but I think we can hopefully expect a moderate return to normalcy only by Q3. So clearly Q1 and even partially Q2 will not be quarters to write home about. That I think is a given, not only for me, but I think across the sector for sure. Now, as far as the overall business is concerned, obviously there are three distinct segments in the business: the offices, retail, and residential. So the offices component, Nikunj, has so far at least, held up pretty well. Both April and May rentals we have collected in excess of 90%. And if you see the other major rental players, I think they also report a similar set of numbers. June also, the trends are good. Retail, we were the first ones to announce a complete rent waiver for minimum guarantee waiver to our tenants for the lockdown period, and also a calibrated waiver through the year. 50% in Q2, and going forward we keep on reducing it. But we have now finally agreed to a full program with our retailers, because we believe that as a major landlord, this is the time for us to stand with our retailers and help them bounce back, because frankly, our own health depends on how strong they are. The residential piece, obviously the first month, 6 weeks, nothing happened. We are seeing some green shoots of demand re-emerge. But I think clearly, as we mentioned in the analyst call as well, we are ourselves sort of trying to reboot our strategy onto two things. Clearly to recommence the sales cycle at a relatively early to mid stage of construction and not wait for completion before we sell. And B, also reindex the ticket sizes to more value to more mid value propositions, versus focusing predominantly on the luxury space, which was our strategy for the last few years. So I think that's where it stands right now.
Okay, let's start with the commercial aspect. Work at home is the new reality. So your office business, or the office commercial business, you're saying so far is looking strong. But as companies recalibrate their own rental cost, their own work at home functions, do you expect that it's going to be a very tough year, cancellation and renegotiations in your office commercial business?
So I'll tell you, I mean, if you do a slight drill down of the entire commercial offices business, there will definitely be a work from home trend. And we believe the work from home should hopefully, if played well, supplement the productivity, supplement work-life balance and all the other things. But frankly, for people who have, thousands of people working in offices in India, to expect that 90% of them or 75% of them will suddenly start working from home keeping the data privacy concerns, keeping their general productivity concerns, I think is being oversimplistic. The second thing also what will happen, sir, is that to partially at least counter the work from home, there will also be a drive towards de-densification in offices. The conventional 70 to 80 square foot per workstation norms would definitely go in for a change going forward because of the lasting impacts of the pandemic. So clearly in the immediate short term, there is no doubt that both the demand and frankly even the supply are going to be impacted. But we believe that I think in the next few quarters, because India's fundamental premise as a preferred destination, especially for the value-add services, remains. And I think as the Western economies go into greater stress, I think that basically thing will only increase and enhance. Work from home will have an impact, but I don't think it will have the sort of catastrophic impact that I'd say many analysts are predicting. But clearly, the dynamics of this business will change because of work from home, because of de-densification, because of people exercising more caution in terms of migrating work. Clearly, from our standpoint, and we have almost had 3 months to deliberate, but finally, after the 3 months deliberation, we have stuck to our plan to continue building out our 2 new facilities, one at 2 million square feet in Gurgaon, and the second at 2 million square feet in Chennai. So we are resuming the capex on both of those because we believe that in about a couple of years' time, by the time they come on stream, they should be back to we should be back to being a supply deficit sector.
So how should one judge and understand that where CCDL is headed? Basically, to understand where the entire rental business for DLF would move, because that's a very important part of your cash flow. You take a lot of pride in the rental business which you generate, or the rental income which you generate, which in a sense acts as a cash flow for your future expansion. Could that engine be stalling?
So CyberCity DCCDL last year had a total rental income of just north of 3,000 crores. Had there been no pandemic, this year we would definitely have been in the 3,800 crores number, because all those assets are in the final stages of going on stream with rentals. I think clearly there will be a couple of quarters slowing down and delay, but fundamentally we believe that this year there will be a stalling on account of the retail sector, which will definitely take some degree of hit for the rental income for the year. However, retail for us is about 16% of our total rental portfolio. Offices, as I said, right now, first 3 months show that people are being more resilient than what was predicted. But again, let's keep on looking at this more closely. We believe that by medium term, we should, and by medium term, I'm not saying 7 years, I'm saying medium term means in the next 4 to 6 quarters, we should definitely be back on track. Our new capexes should also, hopefully start completing by that time. So a short-term blip, maybe a couple of quarters for sure. But I think after that, we should hopefully come back onto our track. Maybe the pace of rental growth will be slightly slower than what we had originally anticipated it to be. But we still believe that I think the fundamental trajectory should not change.
Now, one is net realizations of your rental income going down, Mr. Tyagi, because of renegotiation and cancellation. And second is that you are not able to collect rent from your tenants, both on the commercial office side and again on the mall side. Can you update us on that?
So on the mall side, as I mentioned, we have ourselves given a complete waiver to our tenants to give the minimum guarantee rentals for the lockdown period. So from 1st April till mid-June, the retailers have got a complete waiver. It was a conscious decision we took after a lot of consultation with the retailers, obviously. And even going forward, we have put a calibrated recovery in place that I think Q2, they need to pay 50% of rentals, and gradually it sort of keeps on going up. We expect that by the end of Q3, we should be almost back to near normal. But again, let's see how the pandemic behaves, frankly, because there's something, Frank, that I don't think any of us can gain as to how the pandemic is going to behave. But assuming that in the next, taking the examples of other countries which are in the early stages of the pandemic cycle versus us, we believe in the next 4 to 5 months, the retail sector should begin coming back into near normalcy. By the year end, we definitely expect things to be completely normal. But definitely this year, for about a couple of quarters, there would be a severe impact on the rentals of retail. Our retail rentals run at about 125 odd crores a quarter, 125, 130 crores a quarter. So there'll be some impact on that. Offices, as I mentioned, the ongoing office rentals have not dipped so far. Obviously, there will be isolated cases of tenants who want a renegotiation, who want a partial vacation, and I think those are fine. Anyway, every year, I mean, if you see last year also, we had a 4.6 million square feet gross leasing and a 1.3 million square feet net leasing. That means about 3 odd million square feet of tenants did go out of our portfolio. That's a regular churn. Maybe this year the churn will be slightly higher. Let's see. But I mean, we operate at a vacancy level of about 2 to 3% in most of our mature office complexes. So far, we are not necessarily looking at an issue. But again, I mean, as I always say, sir, we are all predicting 3, 5, 7-year cycles basis max at 12-week sort of data points. So again, if the pandemic were to have not slow down, have a big backlash later on, things could change. But the way the countries which are on the earlier curve of the pandemic have shown, we believe that by Q3, things should start coming back into normal. But yes, you are right. There will be isolated cases of tenants wanting to vacate ahead of schedule, vacate partially ahead of schedule, and try to enter into some rental negotiations. And those will be handled on a case-by-case basis.
When you say things will come back to normal in the second half, what is your definition of normal? Are you saying that it will be as strong as what you reported in Q3 of last year, or the definition of normal in the post-COVID world will be very different?
So the way I look at normal is that this entire uncertainty, which is today at an extremely high, I think this uncertainty should begin declining. To some degree, I believe that it's begun declining ever since Unlock 1.0, as we call it. People have begun coming back to offices. Our malls opened about a week back. Obviously, the footfalls are still extremely sketchy, but people are beginning to gradually come back. So I think hopefully, if the trends continue in the next 3 or 4 months, this entire uncertainty and fear would begin to come back. But there will be lasting changes on the way things are. I mean, clearly in terms of social distancing, in terms of de-densification, in terms of a mix of work from home, in terms of people being far more careful in malls, all of those behavioral and density linked issues, I think will stay at least for a medium term till something fundamentally positive happens. But I think from a numbers standpoint, I do believe that, hopefully by the end of Q3, we should be back to our numbers trajectory that we would have been had this entire event not happened.
So I don't want to get this one wrong. What you are saying is that by end of Q3, you will be back to your pre-COVID levels. All you've lost is 2 quarters of sales and 2 quarters of booking.
Absolutely, with the only caveat, assuming things don't dramatically worsen. And that's honestly a caveat that I have to put in, because if they do, then obviously things would change. But right now, let's see how things do. But clearly, if the graph continues to be broadly following the paths of other early COVID countries, be it Italy, Spain, etc., I think by Q3 end we should be sort of coming back to our original curve where we were by say February end or early March.
Which frankly is not a bad outcome. All you're saying, and I'm interpreting it for our viewers here, is that you really have to shift the right hand side of the business by 2 more quarters, which is what all companies are telling us, that look, you cannot judge their business, their demand based on what happened for the quarter gone by and what will happen. Things are normalizing, and that is what I think markets are realizing, because the stock is up more than 30-35% from the recent low in less than last 1 month. Mr. Tyagi, a big picture question, and I'll come back to DLF in a moment, is that sure, the real estate sector has seen a lot of changes. First it was RERA, then big changes have happened on the financing front. What is happening to smaller real estate companies and real estate builders? Do you think post the COVID crisis it would be impossible in India, not only in Gurgaon or in Delhi or the areas where you operate, but across the board in India, that small retailers will find it difficult to even remain in existence, and the Indian real estate sector will be dominated by 20-25 companies?
So I don't know the number of companies, but I think clearly, Nikunj, in every micro market, and I mean, I don't think we should blame just the pandemic for it, but even before that, I think clearly the trend has been that the smaller players are the ones which are increasingly getting stressed. Frankly, I mean, obviously the RERA and the GST compliance, etc., is one thing, but I think their shutdown of access to finance after the entire NBFC, HFC, meltdown that happened across the last 12 odd months, I think that's clearly put them in a huge problem. I continue to stay very optimistic on the government's announcement of, if you recall, the 25,000 crore fund for rescuing the stressed developers. Obviously, because of the pandemic, I think that plans maybe slightly gone slow. But if it sort of once it revives, hopefully it will rescue some of the homeowners who have been caught in that. But I think given the access to organized finance, or rather the absence of it, the smaller and the medium players, and even the larger players who had not used the last few years to fix their balance sheets, I think it will be very tough for them.
Mr. Tyagi, while everybody is focusing on what has happened in the quarter gone by, what will happen to this financial year, you've very openly and candidly shared that with us. But I'll take the clock 3 years forward, FY23. What could be the projected mix of DLF in terms of the total revenue? How much residential, how much rental, and how much office space?
So, till last quarter, this quarter, because of the uncertainty, we suspended that slide. We always in our quarterly presentation used to have a slide on the rental, which showed that our rental income from whatever the 30 to 100 odd crores should grow up to 4,700 crores by March 22. I mean, we believe that, and that was a function of the increases as well as the new capex build-outs. I think we believe with this entire piece that March 22 thing will get deferred by, we don't know, but between 2 to 4 quarters. But fundamentally, by 23, by March 23, we should broadly be back on the same trajectory of our total rental scheme. I mean, the total rental income in Cyber City beginning to knock at a 4.5 to 5,000 crores number, in that sense. On the development side, we are clearly rebooting in terms of two pieces. One is that we have an existing inventory, of which a large chunk of it is our super luxury project. That obviously in the immediate short term, we do believe that demand will be extremely muted, but I think hopefully as the economy revs up, it should begin coming back. But clearly we are planning to put a series of launches back in the market, hopefully before the end of this fiscal, both in our GIC joint venture in Central Delhi, which is called Urban and Midtown, where we should hopefully see the first launch before the end of the year. We are also putting in launches in terms of certain independent floor products in DLF City, and clearly looking at more mid-range value-based housing in the entire New Gurgaon sector.